we're talking all things Spotify stock. This is a continuation in the series I'm doing of ARK Invest's biggest holdings. Be sure to check out the one I recently just made about Roku, and subscribe as we continue covering what Cathie Wood is buying. Spotify, some of you may be shocked to learn, is actually not an American company. It's headquartered in Stockholm, Sweden, founded in the late 2000s. Now, let's get a little nostalgic. Back in the 2000s, if you wanted to download a song, you either had to do it the legal way and pay for each song, usually a whole 99 cents, that's like a whole dividend, or you did what most of us cheapos did and you downloaded it illegally using a site like LimeWire and hoped the Crank That Soulja Boy song that you were downloading was indeed the song and that you weren't actually downloading a virus, and praying that the FBI did not come kicking down your door. Then Spotify came to the rescue, saving us from jail and letting the record companies get paid by becoming the middleman between consumers and content. Spotify has become a platform for record labels and media companies to showcase their copyrighted content and have consumers give it a listen, all legally and all for free. Okay, by now you know anytime free is mentioned, that really means that it's being subsidized by ads. You can create a playlist of basically any song out there on your phone or computer, but after a certain amount of plays, ads will start to show up before getting to the next song. For just $9.99, users can unlock Spotify Premium, which allows them to download music, have no ads, and get unlimited skips. Spotify is a freemium service, which means basic features are available via just having to deal with ads, while premium content is only unlocked with a monthly fee. Royalties are paid to the original content owners. Around 70% of Spotify's revenues goes to them, so certainly it's in their best interest to offer that music to Spotify or risk having it be shared a backdoor way for no revenue. It's not just traditional music that makes Spotify so popular, it's the rise of podcasts that have become super in demand these past couple years. Spotify actually owns two of the more sought out after podcast companies, Anchor and Megaphone, which actually make up 35% of all podcasts. This includes exclusive rights to the Joe Rogan podcast. This deal netted Rogan nearly $100 million, and this locks him down with Spotify for years to come. His popular videos on YouTube have now shifted over to Spotify for those wanting to hear his latest in-depth interviews. The Joe Rogan Experience was the #1 ranked podcast in 17 different markets and has brought in many new users. Sponsored recommendations, basically paying the algorithm to promote your content, also went up 50% quarter over quarter. The podcast advertising budget in the US is expected to be over $1 billion in 2021. That's plenty of money that can line Spotify's pockets. Let's take a look at some of their financials from their latest earnings report. Already off to a great start, we can see their total monthly active users has increased 27% year over year, going all the way up to 345 million people. That's almost every single person in the US using Spotify at least once a month. Remember now, Spotify is a very global company. North America actually only makes up just under a quarter of all users, while they are super popular in Latin America and Europe as well. Spotify is making a huge effort to grow in India, a land of over 1 billion people. Hey, music is definitely a universal language, there's no doubt about that. Now, out of the 345 million active users, 155 million of them actually pay Spotify monthly for premium services. That's about 45% of all users. The other 55% support Spotify via watching ads. Seems like either way, Spotify is winning here, though the people who actually have the premium membership make up a significant amount of Spotify's actual revenues. By the way, this is all in euros because Spotify is a European company. At the time of this recording, the euro is currently stronger than the US dollar. Gross margins were 27%, which means they keep 27 cents for each dollar of revenue generated once cost of goods sold is subtracted. They have to pay for things such as royalty fees and of course the streaming delivery cost, though the streaming done with podcast is more margin friendly. Unfortunately, Spotify is not yet operating at a profit, but free cash flow is positive, though not nearly as much as they were last year. Spotify is also in a great cash position with $1.8 billion in cash and cash equivalents, and there's no major debts on their books. Looking at their guidance for next year, we see Spotify expects an increase of nearly 80 million more monthly active users. Revenue should also climb from about $7.8 billion in 2020 to about $9 billion in 2021. Gross margin remains unchanged, and they're still operating at a pretty big loss. I personally don't always take the guidance numbers very serious, but what is super important to note is that the C19 does not seem to have had a very material impact on Spotify. In fact, during their latest earnings call, they said that more people were spending more time at home, which means that they were streaming Spotify more, and they actually saw this as an accelerant of their user base that they may have otherwise not have had. Though the actual amount of revenue advertisers actually spent was hurt, but we can expect that to one day recover. You may have noticed at the end of every year, Spotify's marketing team looks like a complete genius because they have totally mastered the FOMO experience with their annual Wrapped campaign. Every year, Spotify gives you a summary of your personalized streaming statistics, such as who you listen to the most, their favorite songs, album, top genre, etc. This was a massive success as people would share this all over their social media, as if someone actually cared about how much you listen to Migos or Jack Harlow. But that's how FOMO and viral marketing works. It becomes trendy to post this, and anybody who doesn't might feel left out. How dare they don't want to share their music listening preferences with everybody else? This is probably billions of dollars in free advertising for Spotify. Now, the most important part of this video is making sure that you hit that like button and subscribe to the channel. A close second to that would be how much Kathy loves Spotify. Going on to the Kathy's ARK's website, we can see that Spotify is currently their 7th largest position. Think of all the companies ARK analyzes and does intensive research on. Only 6 others did they see as more lucrative than Spotify. Spotify is currently both in the ARK-K ETF, a generalized conglomerate of all ARK ETFs, as well as the ARK-W, which is the next generation internet ETF. Spotify currently makes up 3.3% of all ARK holdings. ARK owns about 1.37% of all Spotify shares outstanding. Spotify currently has a market cap of $67 billion, which I'm not gonna lie, I thought this company was even bigger than that. Moving on to the graph here, we can see that Spotify has continuously bought ARK since August of last year. Now, the share price was kind of stagnant for a while, but then it took off again just as they did their year-end review summary that we talked about earlier, and ARK just continued to pour money into them, eventually crossing all the way in to now 2.5 million shares of Spotify. In fact, all their recent transactions have been buys. You know that Kathy, just casually buying 386,000 shares of Spotify when they announced their earnings. ARK loves to invest in disruptive innovation. Spotify really changed the game when they created a platform for people to enjoy audio streaming and a place for content creators to put out their work and get paid. All done legally and all done in high quality. They adapted to the change in physical discs to now becoming all digital. Honestly, sometimes I even forget that Spotify is a company. I just press the app on my phone when working out and I totally zone out, while Spotify continues to make money ad after ad. I love what they're doing with their gigantic audio library and keeping up with the latest trends in the shift to podcasts. But what does worry me is the large percent that they have to pay in royalties. And even their guidance for next year says that they still won't yet be profitable overall. Now, that's not too surprising as this is still a growth company, it's still in those infancy stages and acquiring other companies. Plus, there is intense competition in this field with Apple Music, Amazon Music, YouTube, Google Play. But do let me know in the comments if you think that Spotify is a buy individually, or if the exposure that ARK gives you is good enough for you. As always, the best way to support the channel is to hit that like button and subscribe. And I will buy, stash, collect cash you later.